Good afternoon, and welcome to the 2025 GAAP and SEC Reporting Taxonomy Improvements and SEC Update. My name is Vicki Lesniak, and I'm a manager on the Taxonomy team, and I'll be your moderator for today's webinar. Before we begin, I'd just like to go over a few housekeeping slides. An email with a link to the slides was mailed to participants on Monday morning. If you didn't get it, don't worry. The slides can also be downloaded by going to the link provided on the educational webinar page of the FASB website. We encourage you to download the slides as some of the slides contain considerable information. If you have any questions during the presentation, please type your question into the Q&A panel on your screen and click Send. Remember, it's important to turn off any pop-up blockers so that the webinar feature functions correctly. CPE credit is available for viewing the live program only. Today's program is eligible for up to 1.8 CPE credits. CPE credit is not available for group viewing. Each participant must register separately and meet both the viewing and duration requirements per NASBA. Attendance will be verified using pop-ups that will appear randomly throughout the course of the webinar. Please click on your screen as soon as you see it so that you can ensure that you've got credit for attending the webinar. To receive your credit, you must respond to the required number of attendance checks and stay on for the required number of minutes. If you meet both the viewing and duration requirements, you will receive your CPE certificates within 2 weeks of the webinar through email. A recording of today's webinar and the slides from the presentation will be posted to that website until April 8th, 2026. If you have any questions about this webinar or any of the other educational webinars on our website, please contact the FASB at cpedirector@fasb.org. Now, I'd like to introduce our speakers for today. First, we have the pleasure of having join us for a panel discussion involving AI and structured data, Joe Atkinson, PwC Chief AI Officer for the PwC Network of Firms, Daniel Weil, Data Scientist from the SEC Office of Data Science, and John Turner, who will moderate, who's the CEO of XBRL International. In addition, Julie Marlowe, Assistant Director, and Audrey Wang, Staff Accountant from the SEC's Office of Structured Disclosure, will discuss data quality filings and update us on taxonomies maintained by the SEC. And last but not least, Louis Mathern, Chief of Taxonomy Development, and members of the FASB taxonomy staff will provide an overview of the 2025 taxonomy releases and related resources. Our agenda is to be starting off with the panel discussion on AI, followed by the SEC's update, and then the FASB staff will close with covering the improvements made in connection with our 2025 GAAP taxonomy, which includes related implementation resources and the topics listed on our agenda. And now I'd like to turn things over to Louis Mathern, who will introduce our panel. Louis?
Thanks, Vicki. Just a quick introduction. I'm delighted to welcome John Turner as our moderator for today's panel on the intersection of AI and financial reporting. For those who may not know John, he has served as the CEO of XBRL International for the past decade, leading the ongoing development of the XBRL standard that is used globally to enhance transparency and efficiency in financial reporting. A little story, I first met John in 2001 in Australia at an XBRL International conference where he was giving a presentation on XBRL use at APRA, the Australian financial regulator. At that time, there were no live XBRL implementations. So hearing about its potential from John was both inspiring and visionary. That moment has always shaped how I see him. And as they say, the rest is now history. So John, the floor is yours.
Thank you very much, Lewis. It's been a long time that we've been at this process of digitization, but an awful lot has been achieved. I'm delighted today to be joined by two excellent experts. I'm joined by Joe Atkinson and Daniel Weil. So Joe, as Vicky just mentioned, is the Global Chief AI Officer for PwC. He leads PwC's worldwide strategy for integrating AI into business processes in a responsible manner and hopefully an effective manner. And that has impacted all of PwC's 350,000 plus staff right around the world. So Joe earned his bachelor's degree in finance from Penn State and serves on multiple civic boards, and he lives in Haddonfield, New Jersey. So please join with me in welcoming Joe. I'm also pleased to introduce Daniel Weil. Dan is a data scientist with the Office of Data Science at the US Securities and Exchange Commission. He brings a strong blend of technical expertise and regulatory insight into his work, helping to advance the SEC's mission through the application of data science and advanced analytics. In his role, Daniel works on leveraging data to improve market oversight, detect risks, and support data-driven decision-making across the Commission. He joined the SEC after completing a postdoctoral research in AI and machine learning at the University of Texas at Austin and at the University of Illinois, Urbana-Champaign. He received a PhD in electrical engineering and computer science at the University of Michigan in 2020. So please join with me in welcoming our panelists. And today we're really talking about the impact of AI on all of you. Our audience, which is made up of accounting professionals from right across the United States and indeed further afield. So let's just kick off with an opening question. I mean, how, and perhaps I can start with you, Joe, how do you see AI transforming financial reporting and disclosure over the next few years? It's hard to have a crystal ball in this field, but change is pretty certain, right?
Yeah, no question, John. And first, thanks to you and the team for having me. Thrilled to be with everybody. The crystal balls get cloudier and cloudier the faster the pace goes, and so it is a challenge to figure out where this all takes us. But one thing I don't have to tell this audience, because we all feel it, is that this pace is coming. This pace is here. This change is happening as we speak. So I fully expect that for most of our issuers and preparers, you're already seeing the implications of AI on your preparation. You're seeing it through the ERPs that are applying a lot of AI. You're seeing it through the tools that we use, like the software productivity suites, the Excels, et cetera. You're seeing it in notations that we're making in terms of accounting transactions. We're just seeing it show up all across the reporting cycle. And frankly, these are the very early days. So the way we're seeing it are very spot solutions that are helping with very specific tasks along the line. Obviously, you want to do that in a responsible way. You need to know how that technology is being applied and being used. But I really do believe that these are the early stages, and we're going to continue to see advancing AI capability that's going to elevate analysis, reporting, comparison, things that really matter in the financial reporting system.
Daniel, do you have anything to add, perhaps with a regulatory bent? How is this going to impact professionals working in this field?
Yeah, I mean, I would echo all that. And first off, thanks for having me. But yeah, I would say, we've all seen how transformative AI has been over the past few years, and how it's kind of helped improve efficiency of sort of automating a lot of, let's say, more routine or repetitive tasks in the reporting space and other spaces. But I would just kind of want to echo on the, as Joe mentioned, sort of the responsible AI angle to this. Sort of important to recognize that these AI models we're using now and the ones coming down the pipeline are far from perfect and sort of require human oversight to verify the outputs, make sure the outputs are sensible and accurate. And yeah, in terms of financial reports, I think one of sort of the clear benefits of AI is sort of making technical reports, documentation more accessible through sort of natural language Q&A with these AI models. But again, I would just again mention that that sort of oversight and that expert fact checking and validation sort of remains really important.
Absolutely. So, I mean, it is early days, but can either of you share examples of where AI has already impacted financial reporting or regulation?
Yeah, I'll share an example of where we're seeing a lot of CFOs use AI today, which is preparation for the discussions with analysts and investors. Often the conversation has been about, what do we think our competitors or our industry peers are doing or saying in the market? And that's usually an exercise of reading their public reports. What we're starting to see is the use of AI to analyze and summarize those, including, by the way, which I think is both interesting and, to the point that Daniel made, a really important point in terms of validation, including, by the way, what questions are likely to come from analysts and investors, what information should we be drawing upon for those analysts and investors, and making sure that that is all well connected and solid and supported by the data in the reports. So that's just one example. The other place we're seeing a lot is in the development of notation based on transactions that are being entered into the system. So what is the explanation for a journal entry, and do we have supporting data? And Gen AI specifically is really good at generating kind of the content, the story, if you will, as to the why. But again, it's a perfect opportunity to stress what Daniel hit, which is the human review, the expert review, the application of judgment, I think is so important. And frankly, both of those examples.
Yeah, absolutely. Daniel, is there anything you want to add?
Yeah, I would say, one example, one pretty clear use case that I think AI brings a lot of value add with, analyzing financial reports or other documents, which I sort of alluded to, is this idea of sort of semantic search. So being able to search a document for text that's sort of semantically similar or relevant to some query, and finding information that a more traditional keyword search might miss if the relevant text happen to be phrased slightly differently. So I think this is one area where sort of the additional abilities of generative AI and large language models can really help with extracting information from documents, summarizing documents, and so forth.
So at XPRIL International, we've been very focused on some R&D in this area, and we're clearly very interested to understand the impact of AI on structured data and the XBRL disclosures that companies are making to the SEC and other regulators right around the world. One of the things we're finding is that AI is very good at helping work out which tags are applicable in certain places, but it is by no means perfect. And indeed, it seems a long way away from perfect. But that does mean that it could well be operating in a co-pilot mode to help companies as they work through their tagging processes. But what role do you think structured data plays in enabling AI to enhance financial reporting accuracy and then analytics? Happy to add our own experience in the analytics side, but any thoughts in terms of this combination of structured information and these new models?
Yeah, Daniel, if you want, I'll take the first crack and
Sure.
we can round it out. But John, I think it's interesting. I often, when I talk about AI, I often quote Amara's law, which some of you may know, which is this idea that he posited that we have a tendency to overestimate the implications of a new technology in the short term and underestimate its implications in the long term. And I think some of that's happening right now. So there's a lot of discussion. Will AI just replace tagging? Is this a discussion where we don't need structured data because AI will be so good at sorting through it? That could be in that very fuzzy gray crystal ball we just talked about in some period of the future, if the models continue to improve, the governance and the rail and the guardrails, if you will, continue to improve. But in the near term, what we see is that well-structured, well-tagged data with understandable schemas creates a much better platform for the application of AI than unstructured data. It doesn't mean that the AI can't deal with unstructured data. In fact, it deals with unstructured data probably better than most of us do. But we know that when the data is well structured, tagged, and understood, and the schemas are consistent, that very, very important part of the financial reporting process that we all know is an important obligation we have, which is the ability to compare financial results, one organization to another, and make judgments about those transactions. That context is so incredibly important. So in the foreseeable future, and probably for even the little bit further into that gray fuzzy ball, I think we're going to see the very important reliance on structured data and this relationship with AI. Again, there's a lot of value that AI will provide, but I think it can provide more with structured data than it can without.
Daniel, anything you want to add?
Yeah, I would echo all of that. I would say, as sort of a general rule of thumb, the more structured the data, the easier it is to guide an AI model to generate sort of reliable outputs and to do so more reliably. And yeah, one thing I'd add is, when data is unstructured or less structured, not only is it sort of more difficult to guide the AI model to behave as desired, but it also kind of allows more room for interpretation and more room for the AI to make assumptions, which can mean sort of a higher risk of bias or other errors if the model sort of erroneously interprets the task at hand. But yeah, in general, I just say, the more structured the data, the more structured the input to the AI, the better and more reliable the output of the AI is going to be.
John, I'll share a quick example. Actually, I was talking to Wes Bricker yesterday, who I think you know well, and probably members of the team know. Wes used a really practical example that I'll just echo, which is if you have an invoice, which most of us would characterize as maybe semi-structured data, right? We know what's on there. But if you have the PDF of an invoice, well, for one issuer, that invoice represents revenue, and for another issuer, that invoice represents cost, represents a payable, or you have to provide the context of the data in order for the model to understand what to do with it. And I think that simple example, it's the same premise you could apply and say, if we believe, for example, that journal entries didn't need to have allocations to account codes, that we didn't need the coding in the general ledger anymore because all of this was just going to be sorted out. As soon as you get to that extreme, I think we all get pretty comfortable we're not going to go there, right? That doesn't make sense. But I do think it's important to recognize that context, even as these tools become more powerful and more capable, that context often has to be applied by human judgment with people of knowledge of that context.
In some of the research we've been doing, we've discovered the manner in which these models are able to drill back to source. So here's the filing that went to the SEC, and here's the individual fact in the inline XBRL sitting there on the SEC website, which provides a level of sort of rigor and accountability that is impossible to replicate, or almost impossible to replicate, with today's technology using unstructured information. Those kinds of capabilities would suggest that essentially everybody's data is going to get looked at a lot more closely than it ever has in the past. One of the groups that look at information is obviously the regulators themselves. I mean, how could regulators like the SEC leverage AI to analyze digital filings more effectively? Daniel, is it something you can talk about?
Yeah, so in terms of analyzing filings, or I would say kind of more generally, thinking about document review using AI, there's sort of a number of tasks where an AI model could help. To name a few, summarizing a long document or a portion of a document, extracting a particular piece of information from a document, either a quantitative figure or some qualitative information, and sort of a little more general than extracting information, kind of the natural language Q&A about documents that I mentioned earlier. Yeah, I think with each of these tasks, structured data, as we sort of mentioned, is really helpful. If you have a long document, you're trying to find a particular piece of information in it, it can be a little bit like finding a needle in a haystack. But if you have, a tag document or certain labels or context, it can really help the AI kind of narrow down that search and find that needle sort of hidden away in that haystack. And sort of similar with Q&A, asking questions about documents. If you just kind of ask a model a question about some long document, it might miss relevant pieces of information kind of buried deep within the text. But if you ask a model a particular question and give it some keywords and kind of tell it, hey, can you answer this question? And here are sort of some relevant keywords that might sort of guide you to an answer. It can really help the AI to kind of search and find the relevant information within the document, particularly if those keywords are sort of provided by a subject matter expert who sort of knows how that type of question would typically be answered in a particular type of document. Yeah, so to kind of summarize, I think there's a lot of different tasks. I mentioned, summarizing, extracting information, and sort of think with each of these. Again, the more structured the data, the more reliable the AI performance is going to be, and particularly when that additional context or structure is provided by a subject matter expert who really understands that context more than sort of a general AI model.
Thank you very much. So what do you see how's this impacting preparers? We sort of started out with this exercise, but will preparers be using AI for narrative? Will they using AI to review accuracy and implementation of controls within their framework? What are these tools, which presumably not in people's hands yet, but what are these tools how are they going to impact preparers' lives on a day-to-day basis?
Hey, John, I'll maybe share a couple of thoughts, and then Dan can round out. There's a myth that started probably 24 months ago that the large language models are not good at math, right? And so we've all taken, as the accountants in us have taken comfort in this idea that they're not going to be good at math, and therefore those of us that are even decent at math will survive the AI moment. The reality is they're getting much, much better at math, and they're getting much better at calculation, and they're getting much better at calculation with context. And I would expect that improvement curve to continue. So what we're seeing today is a focus in financial organizations largely on efficiency of production, right? Most of us have the same burdens. We're trying to figure out how to do more with less. We have fewer people, fewer resources than we all would like to have. And therefore, you've got to get efficiency of production preparation moving in a good direction. So you see a lot of efficiency tools and efficiency application of AI. In the future, I expect to see a lot more analysis being driven by the AI than what we're seeing probably at scale today. And by the way, I think that's a really good thing, because when you have that right combination of the human judgment and the technology, then I do think we're going to get better, more insightful analysis. I think it can help us with fraud detection and prevention. In some places, it's already helping us with fraud detection and prevention. And in other areas, it's going to help us with the quality of earnings. It's going to help us with the understanding of risks to the balance sheet, the kinds of things that are really the purpose that most of us prepare financials for. Those, I think, will all be assisted by AI in the near term and future.
Excellent. Anything to add to that, Daniel?
Yeah, not really. I would echo all that and just kind of say, in terms of how it's changing the work, I sort of an ideal world, sort of a shift of focus from automating some of those more manual, routine, repetitive tasks and sort of allowing people to focus more on the sort of higher value strategic work. But again, would just hammer home this point that even if the AI is automating certain things or making certain things a bit more efficient, that sort of human expert validation piece really remains important.
Okay, so I think we've only got another minute or so. We might round out with any quick hits that either of you might have about how AI can help improve quality and consistency of disclosures, whether they're being tagged or not. But I mean, I guess in this context, whether they're being tagged, how these tools are going to help flag anomalies and errors, are they not?
Yeah, I don't think there's any question, John. They're going to help us in the anomaly game. And again, that's been a consistent and persistent challenge for all of us. I also think that we haven't spent a lot of time talking about agents, but I think the advent of agents is going to have a big implication on the way that we operate the preparation of financial statements. And to that great point that Daniel made about where the task can be done, because it's a low risk task, perhaps a repeatable task, and where judgment gets applied. And most of us, I think, would like to spend more time applying judgment than cranking through tasks that can be automated. So I think that the rise of the agents, if you will, which sounds more foreboding than I mean it to, to, but the rise of the agents, I think, is going to be really, really important. And then the other piece, there were a couple of good questions that showed up in the Q&A panel, but the other piece I would just say is, I think the research development that's happening here on what quality looks like in a world with XBRL tagging, as well as the application of AI. I think we're still in the early days of that. We're doing some augmentation of models to evaluate which ones are more, I'll say, effective relative to financial statements, relative to disclosures, et cetera. I suspect the other firms are doing similar things, but we think that space is moving really quickly. And part of what we believe is going to be important is understanding which models are good for which tasks, particularly in this period of agents.
So you're just going to have to, for the audience, just describe agents a little bit more. This is something a bit more positive than something straight out of a sci-fi film, right?
Yeah, they're rising, but they're not coming for us, I don't think. What's happening is we're moving from this kind of chatbot moment where the AI was delivering entirely a Q&A kind of conversation, analysis and an output. What's moving now is the agents can start to take actions. They can start to initiate actions in the systems. And in fact, multiple agents can work together to get certain aspects done. So for example, you could have agents recording certain information while other agents check that information. Again, early days of agentic frameworks, you're hearing all of the major vendors and technology vendors talk about them. It is an area, I'd say, for the audience, invest in learning and understanding where the agents are headed, because that is going to be the framework most of us will be working on when we deploy AI at scale. So think of agents very simply as AI tools that can start to take actions.
And in many respects may be sort of the next thing. We're all familiar with apps. Before long, we're all going to be familiar with agents. Hey, have you tried this agent? It's not here yet, but it's on the way, right?
And
Okay.
I'll paraphrase the CEO of NVIDIA, who talked about his workforce. He said he expected his workforce to grow, and I'm going by recollection, from 35,000 to 50,000, but he would expect it would be 50,000 people with potentially hundreds of thousands or millions of agents that those people are managing. So that's a workforce transition for the way that we're all going to think about the way work gets done. And I think it probably will be the thing we're all talking about for the next few years.
Excellent. Anything to add on agents or anything else, Daniel, or shall we round out and pass back to Lewis?
Yeah, I would just kind of echo their importance and kind of the next big thing, and just kind of point out a point that Joe had made earlier about how, a year ago we were all kind of laughing about how large language models are really bad at math. But this whole agentic framework, if you give a large language model a calculator, it's going to be a lot better at math. Again, essentially endowing these AI models with tools like calculators, as a toy example, and being able to search the web, search databases, and so on. I think that's really where things are going, and where these models are just going to kind of become increasingly powerful.
Absolutely. Well, with that, thank you very much. And I will pass back to the FASB staff. I think I'm passing back to Vicky. But thank you very much, Joe and Daniel, for your answers to those questions. Thanks so much.
Thanks, John.
Thank you.
I'd just like to thank our panel for a very informative and interesting discussion. Now I'd like to turn things over to Julie Arlo and Audrey Wang from the SEC, who'll cover the SEC update on the taxonomies and data quality. Julie, I believe that you're going to be leading us off.
Yes, thanks, Vicki. Next slide, please. Good afternoon, everyone. We're excited to present on SEC taxonomies and data quality today. Let me start with the disclaimer. Today's presentation is provided in my official capacity as the SEC's Assistant Director of the Office of Structured Disclosure, and Audrey's capacity as the accountant in the same office. Our views do not reflect the views of the Commission, commissioners, or other members of the staff. Next slide. Here's what we'll cover today. Overview on SEC taxonomy updates, data quality guidance and trends that we published this past year, update on the Financial Data Transparency Act, list of data sets freely available to the public, and we'll end the presentation with a list of resources. Next slide. I'll now hand it over to Audrey.
Thanks, Julie. As of the EDGAR 25.1 update in March, EDGAR accepts 20 taxonomies in addition to US GAAP and SRT, which are updated by FASB, and IFRS taxonomy, which is updated by the International Accounting Standard Board. Of the 20 taxonomies updated by the ICC staff, 3 were newly added in the past couple of EDGAR releases, and 1 was substantially updated. In July of last year, we introduced the SBS taxonomy that includes elements for tagging reports related to financial resources and related documentation, the SBSEF's Chief Compliance Officer's annual report, and certain exhibits to form SBSEF as part of the regulation SC adopted in November 2023. In September, we introduced the Cybersecurity Disclosure Taxonomy, which is used to tag certain disclosure about material cybersecurity incidents and periodic disclosures about a registrant's processes to assess, identify, and manage material cybersecurity risks, management's role in assessing and managing material cybersecurity risks, and the board of directors' oversight. In December, we updated the variable insurance product taxonomy to include elements for tagging certain non-variable annuities specific disclosures in response to the adopted rule and amendments requiring issuers of non-variable annuities to register offering on Form N4, the registration form for most variable annuities. In the March 2025 EDGAR update, we introduced the SPAC taxonomy to reflect the Commission's adopted rule and amendments requiring enhanced disclosure for SPAC IPOs and de-SPAC transactions to be tagged in inline SBRL, beginning on June 30, 2025. The ones not highlighted are not new taxonomies, but we also updated them to their respective 2025 versions. Next slide. The major update to the ECD taxonomy is that we removed the restriction on the US GAAP element being used for tagging the net income or loss in the pay versus performance table. The net income or loss in the PVP table must be the net income or loss as required by Regulation SX that is reported in a registrant's audited financial statements. Therefore, the same element used to tag a registrant audited financial statement should be used in the PVP table. Next slide. We added a co-registrant access to the OEF taxonomy so that a single filing may be submitted with more than one trust identified by different CRKs. We also updated the OEF taxonomy to permit the use of share class access in the fees and expenses definition link rule, as well as the dimensional use of supplement to prospectus text block element. Finally, for the taxonomies that are based on ISO standards, we made substantive changes to the currency, exchanges, and subnational jurisdiction taxonomies to align them with the latest version of the respective ISO standards. There are also other minor changes that I want to cover, but to encourage everyone to take a look at the latest release notes at the URL provided here. Next slide. Now move on to data quality. Staff in the Office of Structured Disclosure, which is part of the Division of Economic and Risk Analysis, periodically perform assessments over the SBL data submitted in EDGAR. If we notice any trends or issues that are systematic, we post those observations or data quality reminders on our webpage shown here. Since last April's webinar, we posted 2 data quality reminders. One is related to the inappropriate use of customer tag for tagging provision or benefit for credit losses on the income statement. We found certain banks created customer tags for the provision or benefit of credit losses for unfunded commitment, even though a standard element is available. We also found certain banks created a customer tag for the total provision or benefit for credit losses when they had both on-balance sheet and off-balance sheet credit loss exposure. These filers should have used the standard provision for loan lease and other losses element to tag the total presented on the consolidated income statement. The other data quality reminder is related to the incorrect tagging for earnings per share data. When the amount of basic and diluted EPS is the same, filers may choose to present that amount once with appropriate label such as basic and diluted EPS. We found certain filers created a custom element to tag that amount, or tag that amount with one of the two standard elements, EPS basic or EPS diluted. The appropriate approach is to tag that amount twice with the two standard element. We have an FAQ, question F5, that provides guidance on tagging a single value that represents two separate facts with the same value. Next slide. In addition to data quality reminders on our webpage, as part of the March release every year, EDGAR incorporates the latest version of the DQCRT. This rule set is first posted by FASB in December every year. It is a subset of all the validation rules that SBR US publishes. For 2025, FASB added 14 of those rules to the existing set from 2024, for a total of 60 validation rules span across a wide range of topics. When a filer makes submission in EDGAR using US GAAP taxonomy, the submission goes through all those validation rules. And if it fails any of those, EDGAR will return a warning. Filers can still make the submission, but staff would encourage all filers to review those warnings to ensure there isn't any correction needed for the tagging. The technical guide and other information on the DQCRT are available on the FASB's website for SBR taxonomies. With that, I'll hand over to Julie to speak of Financial Data Transparency Act.
Thanks, Audrey. As a refresher, in December 2022, the Financial Data Transparency Act was passed and requires the SEC and other financial regulatory agencies to adopt open data standards, among other requirements. Under the FDTA, the SEC is also required to issue a semi-annual report on the public and SEC staff's use of machine-readable data for corporate disclosures. Please check out our latest report, December 2024 version, which covers the staff's use of data to identify filer types for accounting consultation purposes and enforcement actions resulting from the use of data, among other discussions. Next slide. Our staff maintain and update 14 data sets for the public's use. These are free, and we update them either monthly or quarterly. We often get questions from various data users, such as investors, academics, financial firms, and other federal agencies. Financial statement and notes data set is among the most heavily downloaded items on the SEC's website. Please take a look and contact us with questions. Next slide. We'll end our presentation with links to more resources. Our website includes links to staff observation and guidance on data quality. For technical questions on tagging, please contact us at structureddata@sec.gov. For compliance questions, even tagging compliance questions, please contact the policy offices, such as the Division of Corporation Finance or Investment Management. The last link shows all announcements issued by our office, including updates on our taxonomies and data quality. This concludes our presentation. Thanks for your time.
Thank you both, Julie and Audrey, for a wonderful presentation. And now I'd like to read a disclaimer before we begin the overview of the 2025 GAAP taxonomy improvements. This disclaimer is for all of the FASB staff presenting. The views expressed in this presentation are those of the presenters. Official positions of the FASB are reached only after extensive due process and deliberation. And now, Donna Johanneman from the FASB staff will provide a brief overview of some of the 2025 taxonomy improvements and how to find the resources to help you use the taxonomy. Donna, I'll hand things over to you.
Thanks, Vicki. This graph provides a visual of the changes in the taxonomy over the past 5 years, and 2025 is relatively consistent with most of the years. The increase in new elements is mainly from new accounting standard updates and SEC requirements. We also added new elements from our reference project, which reviews the reporting requirements and references the applicable elements. And we'll talk more about some of these changes later, but you can find the information about the improvements on the taxonomy page of our website as provided in the link. On this slide is a list of the amendments to the accounting standards and SEC rules that have taxonomy improvements for the 2025 version. The amendment for the disaggregation of income statement expenses was finalized in 2024, and we added new elements from SEC rules related to employee benefit plans, filing Form 11K, business development companies, and for private company alternatives. We also deprecated elements from superseded guidance related to amendments in previously issued ASUs. And other projects with updates that are included are from the reference project with 12 topics reviewed this past year, along with a set of elements that did not have any references. We will continue with additional topics for this year for the 2026 version also. And I'm going to leave it with David to talk about the meta model and the DQC rules taxonomy later. So there are a number of resources to assist with selecting the appropriate element for tagging. And finding the elements through the codification is illustrated on this slide using 220.40.50-6 from the topic of disaggregation of income statement expense. And for this paragraph, there are subparagraphs A through E. And for subparagraph A, the purchases of inventory, there are elements specifically referenced to that subparagraph. And you can find them if you click on the ellipsis by the top right. You will see a drop down with the selection being C XBRL elements. And if you click that, you'll get a pop-up that shows for each subparagraph the elements that are referenced there. So this explicitly connects the intended elements to be used with the reporting requirements. And also for those that are interested, under the tools section, as shown in the bottom right box, there is a CSV format file for all taxonomy elements with the references available. And I'm going to let Louis tell us a little bit more about this file.
Yes, thanks, Donna. Just a few words on the taxonomy element reference file. So this file contains all the reference links between the taxonomy elements and the accounting standard codification. This file will be most useful to software developers that would like to leverage the linkage between the taxonomy elements and the associated accounting standard codification for a specific application that doesn't require the full taxonomy load. It is also updated more frequently. So we're hoping that software developers will be able to make use of this. Back to you, Donna.
Thanks, Louis. Next slide. In addition to the codification and inclusion of elements by paragraph that we just saw, there are other resources with each annual release of the taxonomy to help with transition. So from our website, you will find a page with these resources, such in the red box. There is a set of release notes that provides a summary of the changes and an explanation in PDF format. In the green boxes are Excel files that contain only changes for that version of the taxonomy, in this case, 2025. The blue boxes are Excel files of the entire taxonomy and provides the ability to use Excel tools such as filtering and find functions to assist with using the taxonomy for those that may prefer that format. I want to highlight some of the taxonomy implementation guides that are new, updated, or finalized for the 2025 taxonomy. We have a guide to explain the creation of Boolean, fixed list, and extensible enumeration elements. We'll issue a guide shortly related to the new requirements for disaggregation of income statement expenses. We have guides either final or proposed, which will be finalized soon, for employee benefit plans filing Form 11K, income taxes, and segment reporting after adoption of 2023-07. And Melissa will cover some of these later. We also are updating the accounting changes guide to add examples for changes in estimates, which I'll cover briefly shortly. We are updating the guides for other comprehensive income, or OCI, repurchase transactions, and retirement benefits also. We will be finalizing the fair value inputs guide and 2 guides for preparers to assist with using certain structures in the taxonomy, which are extensible enumerations and financial statement location dimensions. We updated the reference style guide also, and this guide is generally used by the taxonomy team to try to ensure consistency in how we approach referencing. But we also publish them to help with understanding how or why we develop the taxonomy in a certain way. So sign up for action alerts or keep an eye on our website for postings of the guides. So the new examples in the accounting changes guide for changes in estimates is provided because of the diversity in tagging that we were observing. And this example, which is example 11 from the guide, is illustrating a change in estimate for useful lives of equipment and customer contracts. So the reporting context of each year is used with each value to indicate what it went from in the prior reporting period to what it is in the current reporting period. For example, the equipment went from a useful life of 3 years in the prior period to 4 years in the current period. So the green arrow is for the prior period with a useful life of 3 years, and the orange arrow is the current life of 4 years for the equipment. The change of 1 year uses the change in accounting estimate axis with a service life member to tag the effect of the change of 1 year. The effect of change in estimate axis is not needed on the useful life in the prior or current period. It is only used for the effect of the change in life. Similarly, the monetary effect of the change in accounting estimate uses the axis for this effect. In this example 11, the change in depreciation expense of $8 million from the change in service life uses the depreciation line item element with the effect of change in accounting estimate to tag the value. So please see the accounting changes guide for additional information and explanation. We added a new FAQ 2.23 to provide assistance in how to tag dividend per share amounts and related information. There was again diversity in practice on how this information was being tagged. The flowchart illustrated on the screen, which is also in the FAQ, considers when to use the duration element, common stock dividends per share declared, and when to use the instant element, dividends payable per share. So if more information is needed, the FAQ provides 3 examples to assist in tagging dividend information. So if you report dividends, I encourage you to read through the FAQ. So now I'm going to, I think, turn it over to David.
Yes, thank you, Donna. And next topic is we're going to be covering the 2025 meta model. So next slide, please. Traditional XBRL relationships have primarily focused on the presentation and simple validation of information, whereas the meta model is intended to provide more expressive relationships that convey the semantic meaning of the elements, but largely through the assignment of traits or attributes to the elements, but also by providing accounting relevant relationships. As accountants, we all know that depreciation expense accrues into accumulated depreciation, and that accumulated depreciation is a contra asset to property, plant, and equipment, even though those relationships are not expressed in the financial statements, nor have they traditionally been expressed in XBRL taxonomies. However, this information is included in the meta model as a means of assisting in element selection and improving the ability to search for the appropriate elements needed for tagging. We're also seeing that the meta model is facilitating the writing of business rules, as a few of the new DQC rules are leveraging the relationships that have been included in the meta model. And it's also useful for identifying inconsistencies in taxonomy modeling. Next slide, please. The meta model is intended to have a positive effect on preparers by providing a better means of element discovery through the articulation of the properties of the elements. It is our longer-term goal that preparers are able to use the meta model as a means of anchoring their extension elements that is more expressive than the currently available wider and narrower relationship. And I do want to emphasize that current processes should really not be affected by the meta model. We are still including everything into the taxonomy that we traditionally have. This is just additive information to make the taxonomy more useful to all users of it. Next slide, please. So this slide provides a brief history of the meta model and how we got to where we are. In the fall of 2022, we published a beta version of the meta model that was really a proof of concept of what the included relationships meant and whether or not we could actually publish it. In the fall of 2023, we published an updated proposed meta model. It was largely still considered beta as it did not include a lot of relationships, but it was included with the 2024 GAAP taxonomy. This past fall, we published another updated proposed meta model, and this one contains a lot more relationships than the prior two do, and is, in my opinion, much more useful as a means of facilitating element discovery. And it has been included with the 2025 GAAP taxonomy for your use. Next slide, please. So this slide lists out all of the relationships that are included in the meta model. We do not have time today to cover all of them. We will just be going through a couple of examples to cover the ones highlighted in yellow. So if you would like more information about the ones that we won't be covering today, or even the ones that we are, you can read about it in our meta model relationships guide. And I have provided a link to that guide on the right side of the screen. In addition, on May 21st, I will be co-hosting a webinar sponsored by XBRL US, where we will be covering all of the relationships included in the meta model. Next slide, please. So this example illustrates how the trait domain, domain member, and trait concept relationships work together to apply traits to concepts within the taxonomy. So the example I have on this slide is the debt guarantee trait, which is whether or not a debt instrument is secured or unsecured. And you can see at the bottom of the image that the concept commercial paper has a trait concept relationship with unsecured debt as it possesses that trait of being unsecured. Next slide, please. Oh, back one, please. Thank you. So new for the 2025 is the aggregate other relationship. And because it's new, I would like to walk through it today. This relationship is between an aggregate element and the element that represents the other component in the aggregation. Both elements in this relationship will have the same period type and balance type. The source or parent element is the aggregation point, and the target or child element is the other component of the aggregation. So the benefit of providing this relationship is that it clearly identifies what is the aggregation and what is the other component. So for reporting purposes, you can't disclose that you just have an other if you do not provide any further breakdowns. At that point, you're only reporting an aggregation. And I have an example on the next slide to illustrate that. So next slide, please. Thank you. So on the left side of this slide, we have assets non-current having an aggregate other relationship with other assets non-current. And on the right, we have a partial balance sheet. And as you can see, current assets is broken down into its component parts, which includes other current assets. However, non-current assets is just reported in the aggregate. So this would not represent the concept of other assets non-current. It would represent the aggregate or total of assets non-current. And so that's how that should be appropriately tagged. Next slide, please. Lastly, I just want to reiterate that on May 21st, Campbell Pride of XBRL US and I will be co-hosting a webinar where we will be covering all of the relationships included within the meta model and also talking about the improvements that have been made for the 2025 version. Next slide, please. And we are on to the next topic, which will be the DQC rules taxonomy or DQCRT. Next slide, please. The DQCRT has the purpose of enhancing data quality by increasing exposure to the DQC rules. It is a uniquely structured taxonomy that just focuses on conveying the DQC validation rules. It is not meant to be used in extension taxonomies, but it is used for regular use. As Audrey mentioned, it is being used in the Edgar system for their checks. And as Audrey mentioned, the 2025 version now includes 60 DQC rules, as 14 have been added for 2025. And if you would like more information on the DQCRT, we've provided a link to the webpage at the bottom of this slide. And next slide, please. On this slide, we've listed out half of the new 14 rules that have been added. We do not have time to cover them today. So if you would like more information on any of the new ones or any of the existing ones, you can go to the DQCRT page that I mentioned on the previous slide. And next slide, please. And on this slide, we have listed out the remaining 7 new additions to the DQCRT. I do want to highlight that rules 135, 136, and 137 all address data quality issues around the disclosure of values that are not separately disclosed in the FASB financial statements. And these rules work in concert to help ensure that that data is tagged appropriately, that makes the best use for consumption of that information. Next slide, please. And lastly, for the DQCRT, I have this chart from XBRL US Data Quality Committee, and it shows the number of exceptions for two DQC rules. The first one being DQC1, which focuses on access and members, and that's the navy line in the graph. And the other one being DQC15, which focuses on negative values, and that is the orange line in the graph. And as you can see, the number of exceptions to these two rules was actually quite high in 2020 prior to the checks being incorporated in the Edgar system. But after the checks were incorporated in, you see a precipitous drop in the number of exceptions to these two rules. And to me, that really signifies two things going on here. One is that the DQCRT is having its intended impact on addressing data quality issues. But two, also that the service providers and preparers are embracing these rules and addressing the data quality issues in their filings to make the information in their tagged in their filings much more useful to the consumers of that information. And so we just want to thank you for the efforts you are putting forth in addressing these data quality issues. And with that, I will turn it over to Melissa to cover the next topics. Melissa?
Great, thank you, David. So for this next section, I will take you through the disaggregation of income statement expenses. So next slide, please. So for the expense disaggregation disclosure requirements that were added to subtopic 22040 in the codification, we have made several updates to the 2025 GAAP taxonomy. And I will provide an overview of the new model for tagging the disaggregation of income statement expenses, affectionately referred to as DICE, and take you through some of the new elements and existing elements that are now included as a new presentation group in the taxonomy, and walk through an example of using these elements in one of the examples to be included in our taxonomy implementation guide, which we hope to be publishing soon. Next slide. So in the new presentation group, 220-400 in the taxonomy, there are, in addition to the new elements for text blocks and table text blocks, there's a new type dimension for tagging the disaggregated information to be disclosed in the notes for each expense caption. And what it's meant to do, it's meant to group or hold together the items in the XBRL data for the caption and what's disclosed for that caption. And line item elements are to be used for tagging the information that's for each caption, starting with as you see here on the screen, the prescribed category elements. And those are the ones that are included in the orange box. We have a new line item element for tagging the purchase of inventory, a new line item for tagging the employee compensation, excluding one-time employee termination benefits, and the existing elements for depreciation, which is currently being used by over 4,000 filers, as well as an existing element for the amortization of intangible assets and the elements for DD&A. We also have elements for the cost incurred basis for inventory, if that is being elected, and those are what you see here in the gray box. We've also included elements within the black box here in the two abstracts provided for tagging the required amounts that are to be included in the tabular integration for the DICE expense disclosures. We've also provided line item elements for other items remaining, as well as for tagging the reimbursement amounts. Those are the elements that you see in the purple box. Next slide, please. Now, one thing to note about a type dimension is that the members, they have to be created by the preparer. So there are no member elements in the taxonomy itself. The preparer has to provide a value for that. And it's supposed to follow a specific pattern. And the specific pattern to be used for the DICE caption identifier access is included here in the taxonomy implementation note. And it's supposed to contain 3 components. One, the namespace prefix from the taxonomy in which the element is derived. So for example, US GAAP with a colon and the element name. So here's the format that's highlighted in the middle of the screen in yellow. Now, as to the remaining points on this slide, I think I would rather illustrate them for you as I walk through an example on the next slide. So here you see the income statement with 3 relevant expense captions highlighted in orange and yellow. What I'd like to first draw your attention to is the selling general administrative expense line item of that caption for 2849. That's to be tagged with the L3 line item. And if you look to the bottom left of the screen, you'll see a legend for the elements. And you'll see that that element is for selling general administrative expense. And the element name for it in the taxonomy is US GAAP selling general administrative expense, which is what you see highlighted here in yellow. Now, when you look at the information disaggregated for that caption at the bottom right of the screen, you'll see it consists of employee compensation, depreciation, PP&E impairment, intangible asset amortization, other SG&A amount, and a description of what is included in other. Now, you'll notice that each piece of information disclosed is tagged with a different line item element, as well as the A2 DICE caption identifier axis with the member value using the element name for the element that's used to tag that caption in the income statement, which is here shown as US GAAP selling general administrative expense that's highlighted in yellow. Now, notice whether it's the caption in the income statement or it's the disaggregated information disclosed in the notes, there are line item elements expected to be used for tagging this information. And so, for example, the existing model in the taxonomy for tagging depreciation, regardless of where it's disclosed, is to use the line item element shown here as L12 for depreciation. In addition, by being able to use the existing and new line item elements in the taxonomy, the XBRL data is able to contain calculation relationships for the caption and the information disaggregated for the caption. So for example, an XBRL calculation could be provided for L3, which should be the parent total with its summation children being L11 plus 12 plus 20 plus 13 plus 15. Now, When it comes to tagging the captions for cost of goods sold and cost of services, it gets a little more involved because the XBRL model for tagging this information is to use the same line item element, L2 for cost of products and service sold, with the A1 product and service axis and the applicable member element. So what I just walked through for the SG&A caption still holds for the cost of products sold and cost of services, in the sense that when the information for these two captions are disclosed in the notes, the A2 DICE caption identifier axis is still to be applied to the line items disclosed for each caption, with the member value using the element name for the element that is to be used for tagging the cost of goods sold and cost of services captions, which is what you see here on the right, highlighted in orange is US GAAP cost of goods and services sold. Now, in addition, the axis and member elements for the cost of product information, which is shown here with the A1 product and service axis and M1 member in the red box, is also intended to be applied. Now, for the cost of services, in addition to using the respective line item elements with the A2 caption identifier axis, the A1 product and service axis and respective member elements shown here as M2 in the green box are also intended to be applied. So next slide, please. Now, if the information is tagged as indicated in the illustrative example that I just walked through, you'll see that for the 3 relevant expense captions in this example, there are 3 columns available to a user of this data. And notice that within each column, what's contained in there are all the line items tagged in this disclosure, and each piece of information is basically contained in these columns and identified by the element that's used for tagging the caption in the income statement. And so, which is what you see here, for example, the 2849 is tagged with the US GAAP selling general administrative expense, and that is the same member value that is used for that caption, that is used as a container for that caption, if you will. Next slide, please. Now, I know I kind of went through that rather quickly, but don't worry, a taxonomy implementation guide is being drafted with this example, in addition to the other examples that were provided in Section 55 in the codification in subtopic 22040 for the new expense disaggregation disclosures, which we are hoping to publish for public comment soon. Next slide, please. So next, I will take you through our next topic, employee benefit plans, and those specifically filing SEC Form 11K. So for this section, I will provide some reminders about using the GAAP EBP taxonomy for inline XBRL, as well as provide some of the updates for the 2025 GAAP EBP taxonomy and some of the resources that are available in addition to the taxonomy implementation guide, which we recently issued. And I actually have a PSA, a public service announcement, if you will, about some updates to the recently accepted 2025 GAAP EBP taxonomy related to the plan-specific member format for use with the legal entity access. Next slide, please. So the GAAP EBP taxonomy, that's to be used for tagging the financial information in SEC Form 11K, which is for the annual reports of employee stock purchase, savings, and similar plans. And that is what's considered within the scope of employee benefit plan, or EBP, as you see those terms used in this taxonomy. And the timing of when you file your next Form 11K will determine whether an inline XBRL filing is also required. So you may recall that when the amendments for the to the Edgar filing requirements were issued in July of 2022, they also included a 3-year transition period in which the Form 11K filers would have to comply with submitting an inline XBRL. And so if you do the math, July 11th, 2025 would mark the end of that transition period. So plan to file accordingly. For the 11K filings themselves, they will be required to mirror the inline XBRL requirements for the financial information included in other annual reports, such as in Form SEC 10K, which includes the level 1 tagging for the block tagging, the level 2 accounting policies tagging, the level 3 tables tagging, and the level 4 detail tagging. Next slide, please. When it comes to the elements that are to be used for tagging the employee benefit plan information in the Form 11K, the expectation is that just a certain set of line item elements from the SEC DEI taxonomy are to be used, but otherwise only US GAAP EBP specific line item elements, text block elements, policy text block elements, table text block elements, and hypercube elements, which are those elements that end in the word table, are expected to be used. And if you are not able to find one of these, the expectation is that you should extend. Now, however, only for access and member elements, those elements can be either EBP specific or they could be from another taxonomy. We have done our best to include the most applicable access and member elements for tagging the information in the in an 11K EBP disclosures. But if you do need to find a member element, for example, if you're looking for a specific member element that was not included in the EBP presentation groups, such as a member element for a specific type of investment that you're disclosing, then that is where you could look outside the EBP taxonomy to a different taxonomy, such as the US GAAP taxonomy for such an element. Now, the last point on this slide relates to the use of the legal entity access with a plan-specific member. That is expected to be used on every fact to be tagged in XBRL for the Form 11K. And that is essentially going to serve as the unique identifier in the XBRL EBP data. And the reason for that is that the central index key, or the CIK, for the employer or the registrant, that's currently used when filing both the Form 10K and the 11K. And currently, the CIK is being used as the unique identifier for the XBRL data for the employer values filed in the 10K. And so to be able to distinguish those values in the 10K from the employer's values for the EBP to be filed in the 11K, a unique identifier is needed, and the mechanism for doing that is the legal entity access with a plan-specific member. Next slide, please. Oh, and just one last point, those two on the previous slide, those 2 points are included and discussed in further detail in the taxonomy implementation guide. Now, as for the GAAP EBP taxonomy, it is organized by the statement and disclosure groups that you see here on the slide on the left. And then you'll notice that the presentation groups for the elements available for tagging the schedule information is included here at the bottom. The 2025 GAAP EBP taxonomy now has approximately 500 US GAAP EBP specific elements. And the new presentation groups that were added are what you see highlighted here in yellow, the most significant of which is included here on the bottom right, are the new elements provided for tagging the EBP derivative disclosures. Next slide, please. When it comes to accessing the EBP taxonomy, you'll see that a separate entry point has been made available again in the 2025 taxonomy, which is what's highlighted here, and identified specifically now as 2 GAAP Employee Benefit Plan EBP taxonomy. You can also access the Taxonomy Online Review and Comment System if you go to FASB.org and navigate to our taxonomies page and click on the 2025 taxonomies, where you'll see that first link that's provided here for accessing our online system, in addition to several Excel versions that are available for download of supporting documents. Now, not only have we provided an Excel version of the 2025 GAAP EBP taxonomy, but we've also included 2 additional files. The first is the modifications file, and the second being a non-substantive label changes file, which I'll cover in more detail starting on the next slide, please. So for the first slide, for the first file for modifications, this contains the modifications to the elements that were made since the 2024 GAAP EBP taxonomy. And they include, as you see listed here on the left, we've added new elements, we've referenced existing elements. And these elements have been made available for tagging those requirements in the codification that's cross-referenced in topic 962, which is the codification topic for defined contribution plans, or they are otherwise applicable to employee benefit plans, such as, they still have to disclose information about risk and uncertainties and contingencies or subsequent events. And these requirements are requirements that you may find, for example, in a GAAP EBP disclosure checklist. Next slide, please. Now, we were not able to get this into the 24 GAAP EBP taxonomy, and so we've added to the 2025 GAAP EBP taxonomy the elements for tagging the EBP derivative disclosures. And for tagging that information, it is expected that the investment type axis with the derivative member is to be used with the applicable derivative assets line item elements that you see here. So if the derivative assets are held by the plan, the expectation, so for that 10.624 that you see screenshot off to the right here, that is intended to be tagged with the EBP investment excluding plan interest and master trust fair value line item element with the investment type axis and a derivative member. But if the derivative assets were instead held by the master trust, then the EBP investment fair value line item element and the investment type axis and derivative member are to be used in addition to the master trust axis and the applicable members. So you heard that right. That's 5 elements for tagging one amount for EBP derivative assets that are held by the master trust. Then when it comes to the derivative liabilities, such as that 8200 that's included in the screenshot on the right, that if those derivative liabilities were held by the plan, that's to be tagged with the EBP investment fair value line item element and the investment trust, the investment type axis with the derivative member. But if that instead were held by the master trust, it's to be tagged with the EBP investment liability fair value line item element with the investment type axis and a derivative member in addition to the master trust axis and the applicable member. Now, when it comes to tagging the more specific derivative disclosures, the investment type axis is also to be used with a more specific derivative member and applicable line items. So for example, if you see here, there's interest rate and contract information and commodities information also provided, then instead of just using the derivative member, the investment type axis with the interest rate contract member or the commodities member is intended to be applied. Next slide, please. So going back to that second file for non-substantive label changes, we have abbreviated employee benefit plan to just EBP in the standard labels. And as a result, we've defined in the documentation labels what that terminology relates to. So you can see in the column, in the third column, what how the documentation labels and the standard labels and period start and period end and total labels has changed. And the reason we did this was to basically help preparers trying to navigate the taxonomy for element selection purposes. We decided and determined that, the width of your monitor should not really be a factor when deciding which element to use for purposes of element selection. Next slide, please. So as to the taxonomy implementation guide, a version 1.0 of the employee benefit plans, including defined contribution plans, filing SEC Form 11K is now available. The examples are the same as what was provided in the proposed guide. There has been no modeling changes. You will still see these 6 examples with multiple subparts illustrated. And these examples were really intended to help preparers understand how to apply the elements to their disclosures. And it's really those disclosures, those examples where it's more than just taking one line item element and applying it to your disclosure. It's those situations that would involve multiple elements, such as the master trust disclosures that I just walked through. Now, in terms of the changes that were made from the proposed guide, the final guide is based on the 2025 EBP taxonomy, but the proposed guide was based on the 24 taxonomy. And so because we've made those abbreviations to all of those standard labels, it looks like a large volume of changes between the final guide and the proposed guide, but it's really for all of those label changes. So the sheer volume of those changes is really the first item I wanted to mention. And the second is it relates to the updated plan specific member format for use with the legal entity, which is what this note in the red text that's included on the cover relates to. And so next slide, please. And so we've previously communicated that the member format to be used with the legal entity access is EVP, employer identification dash plan number and member. And we also provided guidance elements in each EVP presentation group and the taxonomy implementation note with the previous format. And basically, that is what is now included in the red box, which is only to indicate that we received a comment and have updated the format to be used with the legal entity access to the more simplified format with just EBP, plan number, and member. So for example, EBP 001 member. And we will be updating the guidance elements and the taxonomy implementation notes, but that will not be updated until the 2026 taxonomy, which will not be available until around this time next year. And so next slide, please. And so by the time we received this comment, it was too late to update the 2025 EBP taxonomy. Thus, our public service announcement, which is basically not to follow the guidance elements as you will see them in the 25 taxonomy, which is a screenshot of which is included here on the slide. It includes the previous format with the EIN and the plan number, and also not to follow the taxonomy implementation note for as you see here as well. And so when it comes to, if a registrant uses the previous format with the EIN-plan number, it will not result in an error when they're filing with the SEC. What will happen is there will be comparability issues for users of the EBP data from a time series perspective. And that is what we're trying to update and communicate here today. So next slide, please. And so next, and the last topic for today is on segment reporting. And for this section, we have not made any changes to the elements for tagging the segment disclosures in the 2025 GAAP taxonomy. So I will just be covering and talking about the taxonomy implementation guides and what's currently available. We have a newly issued segment reporting after adoption of Accounting Standards Update 2023-07 guide, as well as the previously issued segment reporting guide. And I will cover why there are two guides and what to expect. So next slide, please. So at the end of January, we issued the new segment reporting after adoption of a 2023-07 so that it could be made available for those preparers that would need to tag their year-end disclosures with the new segment requirements following adoption of 2023-07. And it basically provides a more detailed discussion about how to apply the existing segment model to the new disclosures. And the new guide includes 2 illustrative examples that were taken from the codification, the illustrative examples in section 25 that were updated in topic 280. The first is for the single reportable segment entity, and the second is for segment disclosures for an entity with multiple reportable segments. Next slide. And the most important consideration, and hopefully this is what is provided and discussed in great detail in the new guide, is that when applying the axis elements to the segment disclosures, the expectation is that they are applied consistently across all segment disclosures so that the data is aligned for each reportable segment. So what do I mean by that? So when there are no reconciling items between the segment amounts and the consolidated totals for each segment disclosure, that is, you have for each segment, you have your revenues and the profits and assets, CapEx, D&A, and the amounts that you're disclosing for each reportable segment sums to your consolidated totals, then only the segment's axis is to be applied for tagging that information. But when there are reconciling items between the segment amounts and the consolidated amounts for at least one of your segment disclosures, then the consolidation items axis with the operating segments member is intended to be used with the segments axis for tagging the disaggregation by segment. And when it comes to the reconciling items that are not segment disclosures, then only the consolidation items axis with an applicable member is to be applied. And one other item to note is that the segments axis is to be used for tagging both reportable segment information as well as the segment information provided for other operating segments. Next slide, please. Now, here's an example that's included in the guide, and just for the sake of time, I'm just going to just go through this rather quickly. We have 2 alternatives. Alternative A is where there is a reconciling item between just the profit, the segment profit and consolidated profit. And here you see that 2 axis elements are intended to be applied. Meanwhile, when there are no reconciling items, as the alternative B illustration shows, then only the segments axis is to be applied. And if you were to take a look at what this data looks like on the next slide. So here for alternatives A and B, this is what the data would look like to a user of the segment data in XBRL. So notice that for each reportable segment, that within each column, the revenues, the expenses, and the profit information is disclosed and provided for one segment. And while, yes, I know this is just one segment, when there are multiple segments, it becomes, we're hoping that each segment will contain the data aligned for a user within one column. Next slide, please. And as to why there are 2 guides, we wanted to ensure that the guide would be, these examples could be illustrated timely for those preparers that would need to apply the existing segment model to their new disclosures. And as to what to expect going forward, the plan is to issue a comprehensive segment reporting taxonomy implementation guide. Following the transition period, there will just be one guide that would incorporate certain examples from the previous guide, as well as the examples in the new guide. We have received feedback to add additional members to the consolidation items axis, which we plan to include in the 2026 taxonomy. And we also hope to reach a consensus on the model for tagging multiple segment profit measures. And with that, I believe I just turn it back to Vicki. Thank you.
Actually, I think that Louis has a couple of questions that he'd like to pose, so I'll turn it to Louis.
Yeah, well, let's see if we can squeeze in a couple of questions here. Melissa, both of these are actually for you. So during your DICE presentation, you said something about calculation relationships. So the question is, did you say a calculation relationship is to be built separate for SGA, or does the type dimension automatically act as the total for all the elements tagged with it?
No, yes. So that's a good question.
No, yes.
Sorry. So Right, a calculation relationship would be able to be provided for each caption. So separately for SG&A, separately for cost of products, and separately for cost of services.
Okay, and the next question. So on the EBP discussion, what happens if the previous member format with the employer identification number is used when tagging this member on the legal entity axis?
Yeah, so if a registrant elects to use the previous format, it will not result in an error. That's okay. It's just there could be comparability issues for the users of this data going forward. So from a time series perspective, we're hoping that, and this is why the PSA and trying to get this update out there, is that filers use the new format so that when future filings for the same benefit plan are filed, from a time series perspective, the same plan number format is applied. So it's consistently available.
Thank you, Melissa. Vicki, I think that's all we have time for.
Okay, well, I guess we're at this point, I just want to provide the contact information on the next slide. And I'd like to thank all of our presenters, including our panel speakers and moderator. Before you go, please remember participants to fill out a course evaluation. And if you've met both the viewing and the duration requirements, you should receive an email again within 2 weeks with your CPE certificates. So please be on the lookout for it. We hope that you've enjoyed today's presentation. And again, we wish you a wonderful afternoon. Thank you and goodbye.